Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings. Today we're diving into some documents from third Harmonic Bio, and let me tell you, it's a bit of a swan song. This company is planning to shut down, so this filing is all about saying goodbye and sharing the details of how they're wrapping things up. It's like reading the last chapter of a book, but instead of a satisfying ending, it's a financial post-mortem. Let's get into it. This document is a proxy statement, which means it's information sent to stockholders so they can vote on important company decisions. In this case, the big vote is on whether to approve the company's plan to dissolve, essentially to liquidate all the assets and return the cash to the stockholders. It's like the ultimate company garage sale. The company is holding a virtual meeting for stockholders in June of 2025. At this meeting, stockholders will vote on things like electing directors and, most importantly, whether to approve the company's shutdown plan. It's important to note that if they approve this shutdown, there might not be any future meetings, so this is it. There are four main things stockholders will be voting on, and some of them will need to reach an important majority vote to pass. First, they'll be electing 3 directors. Second, they'll ratify or confirm the appointment of their accounting firm, Deloitte & Touche. Third, and most importantly, they'll vote on approving the liquidation and dissolution of the company. Finally, they will vote on approving the liquidation and dissolution of the company. Finally, they will vote on whether to adjourn the meeting to solicit additional votes if needed. That last one is like saying, if we don't have enough votes to shut down, can we have more time to convince people? The board of directors is recommending that everyone votes yes on all these proposals. They want these directors elected, they want Deloitte as their accountant, and they really want to shut down the company and return the money to the investors. However, it's important to remember that some of the company's leaders might benefit differently from this shutdown than regular stockholders. And for more information on this, it is outlined in the report. Of course, there are risks involved with this shutdown plan. The amount of money stockholders actually receive might be less than expected, and that's something to be aware of when you vote. This could happen if the company owes more money than they think, or if unexpected claims pop up. It's like planning a move and then finding out you have way more stuff than you thought, and you're going to have to pay more to move it. What happens if the stockholders vote against the plan? The company admits that it would be very difficult for them to continue operating. Basically, it sounds like it would be a zombie company, struggling to find vendors and employees. Now, let's talk numbers. The company estimates that they'll be able to distribute between roughly 5.13 and 5.42 cents per share. This is based on how much cash they have right now, plus expected income, minus all the costs of shutting down and any money they need to keep in reserve for potential problems. The initial distribution, right after they file the paperwork to dissolve, is expected to be between 5.13 and 5.33 share. As of March 31, 2025, the company had about $272 million in cash. They expect to get some additional cash from stock options being exercised and from interest income. But they also have to pay for things like personnel costs, wind down services, facility costs, and that contingency reserve we talked about earlier. It's like a giant balancing act to figure out how much is left for the stockholders. Why is this happening? Well, the company says they've been exploring options to maximize stockholder value. They contacted a bunch of potential partners to try to find a deal, but ultimately decided that shutting down and returning the cash was the best option. The board of directors considered several factors when deciding to recommend this shutdown. They weren't able to find a strategic transaction that would give stockholders more value. They felt that a reverse merger would be too risky, and continuing to operate as a company wasn't likely to create more value. It's like they looked at all the paths and decided this one was the least bad. There are several risks with dissolving the company. It may cause the existing shareholders to have a shift in ownership, which may limit the ability to offset operating loss carry-forwards against future profit. They also considered the fact that the board and our officers may have conflicting interests with stockholders. One thing to keep in mind is that under Delaware law, if the company doesn't set aside enough money for its debts, the stockholders could be on the hook to pay back some of their distribution. There will also be tax consequences for both the company and the stockholders. For stockholders, the amount they receive will be considered in exchange for their shares, which means they'll have to pay capital gains taxes on any profit they make. Also, stockholders may not be able to recognize a loss until they receive a final distribution. The report also shares information on equity compensation plans. This includes the number of securities to be issued upon exercise of outstanding options, the average exercise price, and the number of securities securities remaining available for future issuance under equity compensation plans. As of the end of 2024, there were roughly 5.8 million 9 cents. Lastly, it shares who owns the company. Atlas Venture holds 23.1%, OrbiMed has about 13%, and BML Investment Partners has 8.3%. The remaining stakeholders have smaller stakes. Natalie Halls, the CEO, owned about 4.6% as of March 31, 2025. So what's the overall picture here? Third Harmonic Bio, after failing to find a strategic partner, has decided to close its doors. It's a tough decision, but they believe it's the best way to return value to their stockholders. However, there are always uncertainties and risks with these wind-down plans, especially regarding potential liabilities. It looks like there's more risk than potential rewards for investors. I'd keep an eye on those risk factors. The estimate of about 5.13 tons to 5 Chavran dollar try 10 to $5.22 to 5.50 tum to $5 and to 5. The best decision for everyone involved is to move on, work and make things work, but it seems like the best decision for everyone involved is to move on. Thanks for watching. If you found this breakdown helpful, give us a like and subscribe for more corporate deep dives. Also, if you have any ideas on which filing should be decoded next, leave a comment below. Until next time.